Vincenzo's Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made, computer software, program trading, probability-based, trading alert, technical analysis, and company philosophy, as I'm your most trusted source in blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere. As old Vincenzo, that's right, me that you're listening to over these airways, old Vincenzo has brought back truth and integrity. Yes, integrity. Back into the trading market, right? And you can see XLM is trying to get above that 21 cent upper resistance, right? You can see Bitcoin's been up, it's been down this morning. DOGECOIN has been up as high as 15.25 cents. And now they're starting to consolidate down, right? And what we gotta watch out for is, can these coins continue to break up? And does XRP follow the suit, or does Doge follow the suit and come up to this upper resistance of 19 cents like so many of these other coins have, right? And that's what we're watching out for, because Bitcoin, like SV, it's continuing to fly. Don't be the rock side, bro. Good evening on this increasingly dark, hot, sticky, uncomfortable early summer, early June. This is Vincenzo's Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, probability-based trading alert and the rock side, bro. You can. And that was another great call by Vincenzo. 25% gain off the $77 mark. Vincenzo bought it at $77. If you've been trading with Vincenzo, we had a $109 price target. How you doing? Oh, way too far away this time. Come on, fucker. Thank you. And you can see that was a phenomenal call by Vincenzo, bouncing off that green ring, and that's where we bought. And I actually swapped out after being up 16% yesterday. I took out and traded that because we're getting near the upper target, and I thought Doge might be a nice play. That I thought Doge had more left on it, so I bought Doge on the dip yesterday on the 50-day moving average. Right, and we're gonna try to play this all the way up to this 20 cent, which is a 40% gain from where I bought it. Right, I don't have a lot on it. I put about $1,100. We're up about 8% right now. Right, so that's what we're doing, because there's gonna be a big fall as the stock market starts to reverse. Bitcoin and crypto is gonna quickly follow. So we're just trying to get the rest of these gains that we can while the getting's good, because it's eventually gonna have a quick and swift turnaround when it happens. Right, but we did very well on Bitcoin SV. We bought it at $77 and we sold it at 94. That's a very good trade. And then we bought Dogecoin at 13 point, I checked last night, 13.8. So we're up a cent. We're up as high as a cent and a half, which doesn't seem like a lot, but that's a big move when it's only 10 cents, right? 11 cents. So we think we got a good run up to 19 cents in Doge for a 40% gain. And then we'll sell that, right? And that looks good. We've been doing pretty good on this, right? Not too shabby. Bitcoin. Let's see what we got going on here. I don't know. You're gonna see the old Bitcoin. It looks like, I still like what I said yesterday. I think it's gonna have to come back and back test this, right? Get rid of that. I don't know. If we zoom in a little bit closer, let's go to 45. Yeah. After you have this pump, now you're getting this up and sideways consolidation. I think this is going to come back and back test this, and then that could catapult you down to lower support, because I don't see any way you don't retest this lower support down here, right? I think you got to retest it. I guess it's possible that you don't. But I think you do. I think you're going to end up back here at $44,000 in Bitcoin, right? Just on this rising channel. And those are bullish continuation patterns with bearish reversals at the top. So we're going to continue to keep an eye out on that. And I posted a fiscal and monetary policy Friday. A nice episode 4, on mortgage rates, right? Your 30-year fixed mortgage is getting close to 5%. Your 10-year treasuries, right? If you look at a 10-year treasury, the 30-year fixed follows pretty closely your long-term treasury yields, right? And you can see, where's our fucking treasury at? Our government 10-year treasury's been on a quick tear. You can see it's at 2.44% for a 10-year. But if you take the 2.44 minus 7.9 inflation, you're negative 5%. So you'd have to be a complete asshole or a moron or have a lack of financial education to buy a 10-year treasury right now. You'd be an idiot. But the only people that have been buying these to keep the bond bull market and interest rates suppressed, if we look at this chart, as long as the chart goes on since 1980, right? The reason we've got a bond bull market, and you say, Vincenzo, how do I know if there's a bull market in bonds? Well, if the bond yields are crashing and going down year over year, you have a bull market in bonds because the money's cheap. They can invest. They can produce capital investment, retool plants, buy back shares, loan money, borrow money, do all kinds of things when bond yields are going down, meaning bonds are in a bull market. All right? And the only reason they've been depressed since 1980 is because the government has been buying shitloads of these bonds to keep the price down. If the government post-2000 wasn't buying government bonds and monetizing government debt, the 10-year treasury would be at 10% right now because nobody would have been buying it the last 15 years because the inflation was outpacing the yield. Just like right now, the yield is being outpaced by inflation by almost 5%. That means even after you collect your yield, you're losing 5% a year holding this bond, government bond. A normal person and a normal market forces wouldn't do that. So if people would stop buying the bond market would go, need to raise interest rates because it's not high enough. And then the rates would rise high enough to get somebody like me to buy the bond or to put money in the bank, right? If we were at 10%, yeah, I'd buy the fucking bond because I'd be up 3% a year, right? But it's already going to cause significant financial problems as we get closer and closer to that 3%. As soon as we breach that 3%, that's when you have massive financial crises happening. You'll have a stock market rollover. You'll have the bond market rollover. You'll have a liquidity crisis, right, as the bond market continues to enter into a bear market. And the 40-year gravy train has officially come to an end. And there's nothing you, me, or the government can do about it. As interest rates rise, 30-year mortgages go near 7% by the end of the year. Home supplies start to stack up. New homes are not being built as much as they were, and they're getting lower and lower every day as the prices to build a new home is skyrocketed, and it's not going down anytime sooner. And as soon as these interest rates keep continuing to go up, no one will be able to afford a house at 7% 30-year fixed rate, and all these homes will be stuck there waiting for a buyer, and there will be no buyer in sight, as it'll be a desert. It'll be a desert of lack of buyers, and the housing market is going to roll over on itself as consumer prices, energy, food, commodities continue to skyrocket, right? It's a big disaster, an inflationary depression, and it's only going to get worse. Peace and love. Peace and love.